we believe that every major jurisdiction in the world will have stablecoins for their currencies that are issued by leading private companies. And we want to see a network of stablecoins around the world that allows on-chain commerce, on-chain trade, on-chain FX, all of these things to take place. So we believe that currency competition is going to become technological, and we believe that every major government is going to need to embrace stablecoins.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands, such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services, such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services, such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward, and with me today is Jeremy Allaire, who's the co-founder and CEO of Circle. Jeremy, great to have you back on.
Thank you. Happy to be here.
Jeremy, I'm really excited to speak with you. There's been a lot of success around USDC and Circle as well. Got a lot of questions for you as the stablecoin market is heating up. There's a lot of competition. And I think I would like to start with a stat I saw on USDC.com, which was launched recently. And that is USDC has processed over $15 trillion in volume. Are you blown away by this number, or has it, has it met your expectations?
Well, it's really interesting. I mean, USDC, we introduced just over 6 years ago, around 6 years ago. We announced it in May of 2018. And it emerged out of ideas that we'd been pursuing for a number of years, which was this idea that you could take what we think of as money, i.e. government obligation money, fiat money, and sort of express it over an open protocol on the public internet. And I think at a high level, the vision behind that has always been that eventually that it could be something that achieved internet scale and was really a widely adopted technology for how money is used in every facet of society. And so in some respects, so when we started, right, we definitely had like big ambitions for where this could go. I didn't think in terms of like 15 trillion or 10 trillion. I didn't really think about it in those terms because, I think a lot of our focus was really just on making it work, making it trusted, integrating infrastructure, getting developers, building with the protocol. And so I think now, like when we think about where we are and kind of that evolution, it's still really small. So these are like big numbers, and I like, we've highlighted some of those on the new USDC.com website. But I think when we kind of step back and you think about the total addressable market, for electronic money just itself, electronic money today is $100 trillion. There's $100 trillion in dollar value. It's about 21 trillion US dollars in electronic form. There's about $100 trillion of fiat currency in electronic form. That's a big market. That's just the amount of electronic money that exists in the world today. And then when you think about the utility of that electronic money, which is the $1 trillion of revenue in consumer payments, the $250 billion of revenue in capital markets transactions, the $3 trillion digital asset market, the hundreds of billions of dollars of just international transactions and payments. So that's like the payment utility side. The volumes are quite a bit larger. And so in some respects, right, it sounds like a big number, but it's actually a really small number. And when you compare it to like e-commerce in 1998 or 1999, when people were like, wow, this is amazing, and I can order these things, et cetera, there was like a fraction of a percentage of retail. And even today, e-commerce remains like a low double-digit percentage of retail transactions. And so these things take a very long time to kind of build out. But I am very proud of where we've been able to get to, and obviously, we're excited because it seems like we're kind of coming into a period where a lot of things are kind of clicking to make this work. Well into a lot of other kind of use cases and so on.
So speaking of use cases and the growth, let's talk about USDC.com. That was recently launched, and on the website, there's the slogan, "The world's digital dollar." And I have so many questions about that because there's also the geopolitical layer to that statement, and that central banks building digital currencies, the United States looking at building what they call a digital dollar. Do you believe that CBDCs will exist, but stable coins will be used by the retail, and could USDC be backed by a CBDC if that's issued?
So, I mean, this is a total theoretical question because there's no work on a CBDC in the United States. That is not a focus. The Fed retired the main project that was a research project around that. There's no support in Congress. There's no political support. So it's not a real thing. And so I think our view is very straightforward. We focus on the here and the now, which is everywhere in the world. In the G20, just take the G20, which are the biggest economies in the world, the biggest governments in the world. Their number one priority for digital currency is putting into place clear, comprehensive laws around digital fiat in the form of blockchain-based digital currency. That is the priority. There's major regulation that's emerging for all the entire EU. Digital euros in the form of euro stablecoins, even digital dollars that would work in Europe. There's clear regulations in Japan, in Hong Kong that's emerging, Singapore, the UAE just finalized their regulations on stablecoins. There's obviously major legislation in the US. And so everywhere in the world, the focus of central banks is the private sector is innovating, blockchain technology is innovating, there's huge amounts of growth and activity, and they want to have a clear legal regulatory framework around it. So that's the priority. And so my view is technology innovation is principally driven by the private sector, and it has been, all around the world, even in China, where the government has total control in many respects, and they can tell people what to do. It's an authoritarian regime where they've built a central bank digital currency. No one uses it. No one trusts it. They don't trust the Chinese government, and they trust Ali, and they trust Tencent, and they trust these electronic money innovations. And so my view is the combination of public blockchains, the open continuous innovation of that blockchain infrastructure, clear legal frameworks that define stablecoins as legal electronic money, that's going to cause a huge amount of proliferation and innovation. And that's what we're focused on. That's the here and the now. There's some theoretical world in the future where the back-end infrastructure of central banks migrates from kind of legacy, SQL databases and mini computers and FTP servers and text files, which is what most electronic money is today. It's very legacy tech stacks, where that gets upgraded to distributed ledger tech using cryptographic primitives to kind of provide shared state. And that's a good technology upgrade. I'm very supportive of that. And if there's a back end, and I can directly settle transactions with the US Fed for USDC, I'd much rather do that over a consensus-based distributed ledger technology than do it with an FTP server with text files or whatever. So I think I'm definitely in support of upgrading fiat infrastructure at the core. But it's sort of pretty clear, the market-driven model and the open internet model, which is so fundamental to all of this, is really going to win the day.
How has your vision for Circle and USDC changed, if it has changed, since the inception?
Well, in many respects, it hasn't changed. And the vision, by the way, it precedes USDC specifically. The founding vision of the company was that global digital currency would evolve, that there'd be an HTTP for money on the internet, HTTP being the protocol of the web. So a kind of a protocol layer that could exist, that could express money as we know it, like a dollar or a euro, and that anyone could be able to connect to that protocol, transact in it, and move value, that the ability to store and transmit value would be commoditized to basically cost zero, and that new technologies for intermediating that value through smart contracts, which, by the way, in 2013, when we founded Circle, was just an idea on a napkin, right? There were white papers or ideas. There were no smart contracts, right? But as a technologist, I have a background working in programming languages and virtual machines and developer platforms. I was really excited about this idea of these kind of virtual machines with smart contracts that could intermediate value. So my view was, these protocols would get built. It would become something that works at scale. The marginal cost of storing and moving value would approach zero. And then you'd have this programmability, which would unlock enormous amounts of new innovation. That was the vision from 11 years ago. And so USDC became the kind of the best expression of that vision. And it really only became possible after Ethereum launched. We needed to have a second generation blockchain that had tokens and smart contracts and a little bit more scalability. And so we couldn't actually build an HTTP for money, so to speak, until we actually had that technology there. And so it is an expression of that founding vision. And in some ways, and I say this all the time now, like to my team and to others, is basically, if I look at where we are today and the vision that we had when we started, like we're basically just getting to like realizing the 1.0 product vision. And so like there was a big vision for the company, and the 1.0 vision is basically where we're getting today. And that's really exciting because there's going to be 2.0 and 3.0 and a lot more to come.
Do you believe that stablecoins are the killer app of crypto and blockchain? And do you think that status would maintain over time?
Well, so I think as I've written recently publicly, like my mental model for blockchains has always been and remains that blockchains are internet operating systems. They're open source kind of internet operating systems, and they're very general purpose in many respects for what they can do. They happen to be really, really optimized for applications where kind of trusted transactions and data. And the intermediation of that is really critical. And so that's kind of fiduciary applications, and the most popular fiduciary applications are money. And so like money is the killer app of blockchains for sure today. Digital commodity money, and then stable value money in the form of stablecoins, without a doubt. So I view Bitcoin as the first killer app of blockchains, right? Which is a non-sovereign, debasable digital commodity money. Clearly, like that's the first very real killer app, and that's still arguably the biggest killer app in some ways. Then I think stablecoins for sure are the next biggest killer app that's out there today. But there's so much happening right now. Just the ability to have on-chain markets and digital tokens that are participating in on-chain markets is a huge innovation. This kind of emerging digital asset capital market structure that's happening is extraordinary and is I think again also in the very early stages of what it can be. But that to me is another killer app. I think over time stablecoins will definitely be viewed as one of the biggest killer apps, just like email became a killer app of the internet. But I think there's so many others that are coming. And then obviously there's going to be killer apps that are built on programmable money. And that's obviously something we're really excited about, which is what are all the applications that you can build when you have programmable, composable money? I mean, DeFi is an example of that even today, where we have protocols that are doing all these things with programmable money. It's amazing what's being built there. And that's obviously now, kind of evolved a huge amount since, 2018.
What do you feel stablecoin adoption will look like in the next 5 to 10 years? Given that, when Bitcoin was started, everybody thought that was going to be the internet's currency. And, in a way it is, part currency, part digital gold, part store of value. But I don't want to transact with Bitcoin with the high fees and the slow processing times. I would rather use USDC, and I do. Do you see you and I walking into Starbucks and paying with USDC?
Yeah, I mean, I definitely do. And I think, the question is it in the foreground or the background? And I think, just like today, like I don't, as a user, think, oh, I'm using HTTP, right? I open up Chrome and I like type something and stuff happens, right? So I'm using applications that have come to the foreground for me, like these browser applications, right? You're going to see, I believe, continued proliferation of large scale, consumer scale super apps. And some of these are the super apps that we know and love today. Some of these are the messaging apps and social messaging apps that we know and love today. Some of these are new Web3 apps that are natively Web3 super apps. And there's competition, and it's really exciting. We're working with some of the biggest financial super apps. We're working with regional super apps like Grab. We're working obviously with major companies that have wallet apps like Coinbase and hundreds of others. So my view is, essentially everyone's just going to adopt these rails because you're going to be at a competitive disadvantage if you don't. Like it would be like having an email service that can't connect to internet email. It's like that was like AOL back in the original days. It's like you're on an island, right? Everyone's going to want the benefits of interoperability, safe transactions, and they're going to want the benefits of all these smart contracts that allow you to do different things with money. And so everyone's going to want that. I think it gets abstracted away. So the user isn't necessarily like, I'm using USDC, although they may. Like we're seeing some huge consumer-facing apps that are embracing USDC, and they're basically promoting digital dollars. And this comes back to the USDC.com, the world's leading digital dollar. We think that's an idea that makes sense to the average person. I have digital dollars, just like I have digital communications. I have digital media. I have all these like digital native things that I do on my devices, and digital dollars is like a very full expression of that. And the same utility that I have in terms of media and communications and information, like that's what we're enabling with this, and we're giving that same utility. And so I don't, calling it a crypto dollar or a stable coin, I'm not sure those words are going to be the words that everyday people are using. Sure. I think clearly a technology like USDC has the potential to be widely adopted. And then, specifically like the Starbucks example, that's the example, like the proverbial, are you going to be able to buy a cup of coffee with it? There are now coffee shops that take USDC, which is awesome. And obviously, you have a company like Stripe, which is arguably one of the most valuable fintech companies in the world. They've been innovating like crazy for a decade in enabling retail commerce to happen digitally. And they have 3 million merchants that use their platform. And recently John Collison, the co-founder and CEO, got on stage and said, we're going to introduce a way to pay, and this is the way money should work on the internet, and it's USDC. And we're going to make it so that any of our customers who want to take digital currency payments can do it. And it's going to allow people to take payments faster, cheaper, more efficiently. And if I'm a business, why wouldn't I do that? Why wouldn't I want to do that? It's like, why wouldn't I have a website? Why wouldn't I have a Twitter page or a Facebook page or whatever as a business? Every business is going to want to do this because they'll be at a competitive disadvantage if they don't. So I think that'll happen. There's a lot of things that are in the way. Like I think the UX of using this is not quite there, although I like tweet about it all the time. There's like incredible products that are launching like every week with better on-ramping experiences. Gas gets abstracted away. The whole experience of using this is getting so much simpler. And so I think this cycle, if you want to call it a cycle, like this cycle, we're going to have those breakthroughs. We're going to have those user experience breakthroughs where the proverbial, your grandma is going to be able to do this and it's going to work.
What are your thoughts on the US dollar as a reserve currency that I believe and this is my personal thoughts, I believe the United States should embrace USDC, get clear stablecoin regulations in place, because there seems to be a move away from the US dollar, and in parallel, there's a move to the digital age and money on the internet and so forth. And some of these BRICS countries are like, hey, we're going to step away from US dollars, do settlement of trade and so forth. What are your thoughts on that?
Yeah, I mean, something that we've talked about a ton and written about and given talks about, and the phrase one of my colleagues likes to use is, are we in a digital currency space race? Is there a space race between currencies? And in some respects, right, currency competition, which is very real, is currency competition in the future also a technology competition?
Mm.
And I think it is. And so the question, there's obviously the competition of the economies themselves. So the ability of those governments to get people to purchase their debt and to hold their debt and to invest in their economies and to make investments into capital assets in their currency. Like that's probably the biggest factor in terms of currencies competition. But clearly the technology dimension is a huge piece of it. And so in that respect, if I'm sitting here and I'm the US government and I'm thinking about the technology competitiveness of the US dollar, I'm thinking about, well, what are the models that have worked in the United States to gain technological advantage? What are the models? In the internet, they had very clear, open regulations that allowed the internet to flourish, allowed technology companies to build and grow and scale. There were very clear roads for the communications industry, very clear roads, even in the private sector space industry. If you look at what's happened with SpaceX,
Right.
private sector innovation has been extraordinary. And so in the West is anchored in liberal market capitalism and a belief that open innovation, open source, open intellectual property, freedom, markets deliver the best results and outcomes. And so the United States need to lean into that. And the way you lean into that in this space is open public blockchains, embrace this technology sector, and then build clear rules of the road for private sector innovation to happen. That's exactly what the Payment Stablecoin Act is going to do for the United States. It's going to have a clear set of rules for digital dollar issuance by private sector actors, bank and non-bank players. It's going to create a common understanding, and everyone in the world will understand what these digital dollars are, their safety, their soundness, their operation, and it will proliferate the adoption and use of the dollar around the world. And I think that's what's at stake. And I think other countries are seeing that as well and experimenting in these areas. So we care a lot about the success of the dollar and USDC, but we also recognize that there are going to be other really important currencies, and there are other really important currencies. We are the issuer of EURC, which is a euro stablecoin. We expect that to become much bigger as regulations in Europe allow euro stablecoins to be a part of the financial system. That's going to grow euro. We believe that every major jurisdiction in the world will have stablecoins for their currencies that are issued by leading private companies. And we want to see a network of stablecoins around the world that allows on-chain commerce, on-chain trade, on-chain FX, all of these things to take place. So we believe that currency competition is going to become technological, and we believe that every major government is going to need to embrace stablecoins, and we'd love to be part of helping that happen. Obviously, we have a vested interest in USDC being successful. I think our view is that is aligned with the national interests of the United States as well.
For sure. Now, you mentioned the EU. They have their stablecoin regulations being rolled out, and your largest competitor, Tether, they seem to be running into some issues there where some exchanges are delisting Tether, USDT, and other stablecoins. Why is Circle positioned to align with these regulations versus the competitors?
So the day that MiCA came into law, or it was passed into law, we announced actually our euro stablecoin, EURC. And we also announced our intention to make our stablecoins fully compliant with MiCA. And we are very committed to that path. We're very committed to that path because legal electronic money in the form of euro or dollar that runs on blockchains is a huge opportunity. And we want to be a primary operator. And the more that we have clear regulation that holds firms accountable in terms of how they're run, their risk management, their compliance management, the banking infrastructure they provide, the assurances they get from major public auditing firms, all these things matter because at the end of the day, we need to know as society that these are in fact, kind of fully reserved, safe, compliant, financial instruments. So regulation is really critical to getting this to go beyond just speculative trading markets and to be used in everyday commerce. And so our view is wherever there's like clear regulations on stablecoins, that's a hugely positive thing. And Circle has always operated as in a regulated capacity. We've always done that. We've done that always with USDC. We've done it with all of our products. And so we think that's really important. We think it's a competitive advantage that we have. And we think that, that will, in the end, allow what we do to thrive in Europe as these new regulations take hold.
Now, there are other competitors that are entering the market. We saw PayPal launch a stablecoin, Pyusd, and then there's talks of Ripple launching RLUSD. What are your thoughts? Do you believe the stablecoin market might become too saturated? And similar, you have a lot of experience in Web 1.0 and .com era. There will be a consolidation eventually. The winners will be clear and the losers will maybe get acquired or go out of business.
I think a couple thoughts. I think first, I think it's great that more companies are getting in this industry, and I think as you have regulations come into effect, I think, for example, you'll probably see 50 euro stablecoins launch once MiCA is in effect. You're going to see a lot of this, and I think clear rules of the road brings competitive markets, and so we want those competitive markets. So that is really key. So there's definitely going to be more competition. I would also say it's, as I said earlier, it's still early days. The amount of stablecoin in circulation is a tiny drop in the bucket compared to the amount of electronic money in the world. The expressed use cases are really only now starting to grow and scale, et cetera. And so it's going to be, I believe, fiercely competitive. This is going to be a fiercely competitive market, just like search became competitive and social. I mean, it was not long ago, people were talking about Facebook as the most important app, and then it was Snap, and then it's Instagram, now it's TikTok, right? Yeah. Like if you ask any of the people running these, it's like fiercely competitive in these internet markets. It's going to be fiercely competitive in this market. So I do expect that. I think we're focused on building great products. We're focused on making sure that we have the most liquid, most available digital dollar in the world. We're very developer focused. We have a huge amount of focus on developer platforms, developer infrastructure, developer products, because our view is this is a platform, this is a utility, and it's a network. And the people who are going to drive that are going to be creators. They're going to be developers who are building utilities and building applications on top of that. And that kind of speaks to my own background, which is I've worked on platforms and infrastructure and developer platforms for a very long time. And I think that is really the key. And I think that will be a strength of ours. And it has been. Like when I think about the success of USDC, we got a lot of success because we worked really closely with the developers that were building on-chain innovations and on-chain protocols, and USDC became really powerful. And I think when you think about these markets, I don't know exactly what the structure of the market will be 5 years, 10 years from now. It's possible it will resemble kind of a power law curve, that the kind of typical kind of, you've got, 2 or 3 major winners and then it drops off considerably. So I think that's possible because money itself is a network effects business and protocols are network effects businesses. And I think stablecoin networks and stablecoin protocols like USDC are these networks. And so I think the more developers building, more applications, the utility, the more benefit there is for users, the more developers want to build, and you get these flywheels going. And I think that's, we have some of that today, but like I said, it's going to be fiercely competitive. It's still very early. New regulations are going to bring a lot of new entrants, big players. PayPal themselves, when they announced their stablecoin, they basically said, hey, now that it appears that regulatory clarity is coming around this issue, we're going to come into this market, right? So we definitely, we focus on building products people love, and then hopefully we can continue to serve the market.
Now, speaking of network effects, you guys done a great job with interoperability and being on different blockchains. I think I just saw yesterday it was expanded to Algorand. I think Coinbase tweeted out that news. And there are questions from the community. Folks want to know when Cardano, when the XRP ledger. And I don't know if that makes sense since Ripple's launching their own stablecoin, but any updates that you can share there?
Yeah, I mean, we're very committed to making sure that USDC and our stablecoins work on many different blockchain networks. And we're likewise, we're in the early days of blockchain networks competing for providing block space, providing computing capabilities, providing technology for people that are building applications in this blockchain internet space. So I like to sort of say, similar to like mobile, back in the early 2000s, there were like 20 different mobile platforms. There were so many. You could build for Symbian, which was Nokia's platform. You could build for Windows Phone. You could build for Palm Pilot. You could build for BlackBerry. You could build for the WAP, which was like how you build like mobile web apps and stuff. Like there were so many, and there were all these different platforms in Asia, and it was all kind of competing. And obviously then eventually like you had some like killer platforms emerge like iOS and Android and kind of mobile web. And then the market kind of consolidated. We're not there yet. We don't yet have like it's still like these operating systems are competing. And so our view is twofold. The first is there's going to continue to be a lot of innovation, in the blockchain network space. Like we had a lot of problems to solve, and we're seeing that. We're seeing new blockchain infrastructures emerge. We're seeing existing blockchain infrastructures find new scaling models. And I think when we think about the number of apps that are going to be built on these networks, if you take like, let's say you have an app that has 500 million users, and those 500 million users are going to be interacting with digital tokens, creating digital tokens, using digital tokens, interacting with smart contracts to do things. Like there are no blockchains today that can support that, none. And so, like we have a long way to go, and these layered architectures and other things, they're all going to lead to more and more proliferation. And so for us, we have to invest a huge amount. Like we have a huge investment as a company, and not just in technology, but all the operations, compliance, risk, the whole thing that goes into supporting these. We're making a huge investment to continue to build support for USDC in more and more platforms. So you should expect that you'll just constantly see USDC launching on more and more networks. I can't obviously say anything about where we might launch next, but we definitely are going to continue to expand where USDC is available.
With regards to what happened with Silicon Valley and some of the bank collapses that we saw last year, USDC had a partial or momentary depegging moment. How are you working to prevent those things where outside third-party institutions, if they were to fail, that doesn't affect USDC?
Well, a couple of things. The first is secondary markets USDC traded because basically the banks that we used to settle were like shut down and closed, and so we couldn't actually settle. There was never an actual depeg, meaning USDC. We've always redeemed one for one. We've never wavered from that, so we've always been able to meet every single redemption request, every mint, every redeem in the history of the company. So that's really important. The key thing, our huge concern has always been that the storing reserves in fractional reserve banks is a risk. And so you're then dependent on the Federal Reserve and the banking regulators and the risk and the sort of supervision and risk management that exists over the fractional reserve banking system. We've always tried to move towards a backing model that is as close to a kind of straight through government obligation as possible. So the good news there is that today, USDC is by far the most liquid, the most transparent dollar financial infrastructure in the world. There's no financial institution that provides greater transparency than we provide. Literally, we provide daily transparency into substantially all of the reserves of USDC through the Circle Reserve Fund, which is itself registered and supervised as an SEC government money fund structure. You can actually see every single T-bill, every single repo on a daily basis. And then the remaining cash is substantially all held in global systemically important banks. These are not small offshore banks. These are global systemically important banks. And that provides effectively the backstop of the government on those dollar cash. About 90% is in the Circle Reserve Fund. Again, the most transparent liquid assets that are there. And this is tremendous. I mean, we've made that progress enormously over the last year, and it's put us in a really good position. So now I think everyone understands that. And now we want to see those kinds of things codified in law. We want to make sure every stablecoin has that same level of assurance behind it and the same level of transparency behind it. We think the market really needs that. And then the other piece is, I think what people forget is that in early 2023, there were several banks. There were 4 or 5 banks that failed, and several of those banks were banks that actually provided accounts to other firms in the digital asset industry.
Yeah.
And so you actually had essentially a global debanking of this entire industry that took place. And that was extraordinary. And it affected every single firm, all around the world. And so what we've been building out over the last year is a enormous investment in banking infrastructure globally. And because we're a regulated firm, we're able to provide regulated compliant banking infrastructure to interact with USDC in Singapore, in Hong Kong, in the EU, obviously in the United States, in Brazil, and we're going to be launching in Mexico, we're going to be launching in Japan, we're going to be launching in other markets. And literally institutional players can create and redeem USDC from those local banking systems with their local infrastructure. And so we've built out this distributed network of banking infrastructure. There's no one in our space that comes even close to this. And that's really important as well. You're not dependent on, one small regional bank in say the United States. We've distributed out that infrastructure and that infrastructure risk on a global basis with very high quality financial institution partners. We just recently announced, for example, in Brazil, the largest commercial investment bank in Latin America, BTG Pactual, is providing that banking infrastructure for USDC in LATAM, in Brazil, which is a really, really positive kind of infrastructure development. So anyone that's building, if you're a developer, if you're in the markets, we're providing this great infrastructure globally. And again, there's no one in our space that comes close right now.
Yeah, that's really great to hear. I love that that strategy and kind of dispersing your network of banks and so forth. I know that the underlying problem is it doesn't have anything to do with you, but more of the fractional reserve banking system and the collapses we've seen. And I know like Caitlin Long and the folks at Custodia are trying to change that a bit. They're running into some hurdles, of course, but is that also like, eventually, hopefully banks can move in that direction where it's not fractional reserved? And I don't know, blockchain solves that problem in any way or can be used to solve that problem in the TradFi world?
Well, I think it's a great question. And this is something I've thought about for a very long time. We believe that the base layer of money on the internet, which is to say blockchain, money on the internet, the base layer of money on the internet should be a fully reserved, fiat instrument. And fully reserved means it's basically an obligation of the government. So you're not embedding in it any fractional lending risk. You're not embedding any bank risk. That you actually have a fully reserved dollar cash equivalent instrument. And it's really important for a couple reasons. The first is, unlike kind of legacy electronic money, digital currency money, like a USDC, like USDC, it has the ability to operate with a velocity that has never been possible. I like to say it's the new physics of money, meaning the physics of money, how money moves, becomes the physics of the internet, which becomes the physics of the speed of light. And the marginal cost of moving a bit, a bit of data is zero. And the marginal cost of moving money will effectively be zero. And so you're going to have this super high velocity money. If you have this super high velocity money that's in the world, the notion that that money would have embedded IOU lending risk of a loan book of a bank is terrifying, right? And even like the run on SVB was an example of high velocity in the sense that, social media created a like, oh my God, this, and everyone had mobile banking and everyone had the ability to initiate these transactions. And so like the Fed had never seen anything like that. It was like a swarm like that. So if you have any embedded lending risk in the base layer of money on the internet, you're creating a huge amount of risk for the real economy, in my view. And so I think the base layer has to be that. And what that leads to is a world which more resembles what was called the Chicago Plan, which was a proposal for how to separate payment money from lending money. And this was in reaction to the Great Depression. And when the Great Depression came, there was this, classically, the collapse of Wall Street. There was a run on the banks, famously, all these runs on these banks. And, the issue was that, it was fractional reserve, right? The money wasn't there. It was lent out, and a lot of the loans went bad. And so it all blew up. So the answer to that, there were a couple proposals. So one proposal was the Chicago Plan, and that was from the Chicago School of Economics, and there was a lot of prominent economists, and they put forward this proposal, which was, why don't we separate out payment money and payment banking from lending and not allow those to be put together? Because if you put them together, you're creating this inherent risk in the money itself. And that plan, which would have essentially said government obligation money can be utilized in these payment banks, and it's full reserve money. And then lending happens with that. You can lend that money, but banks can't themselves create new money, which is what fractional reserve lending does. They create new money. Right. That was rejected. One could argue it was rejected because of the lobbying of the commercial banks. And the alternative was to create a pooled insurance scheme, which is now known as the Federal Depository Insurance Corporation, FDIC. So, okay, things might go bust, but if we all pull together some insurance, then when things go bad, we can just draw on the insurance, right? So that was basically the response. But I think in the age of the internet, in the age of digital currency, where you have money that moves with this extraordinary velocity, that won't work anymore. And so what that suggests is that the service of lending, of how lending takes place, should all be built up from the ground up on top of full reserve money. And so we actually are in the very early experimental stages of this with on-chain lending. And I believe the birth of the future of credit in the world is actually happening in DeFi protocols. I think it's the laboratory for how you can take full reserve money, like a stablecoin, and enable people to lend and take risk and do that with a high degree of transparency, auditability. You can see all the underlying risk management because it's all public and open source. Even a regulator could be able to kind of observe it in different ways. And if you look at the evolution of the banking system today, actually, there's been this huge trend for a long time, really post-financial crisis, towards private credit. And private credit has become a bigger and bigger portion of lending in the market. And private credit is essentially, people who want to invest into credit, and the credit is given, and there is risk taking, and it's sophisticated people who are making this private credit investment decisions. But you can imagine a world where credit markets exist on chain, and where kind of credit intermediation becomes super, super specialized, and enables, with this very high velocity money like stablecoins, enables a radically more efficient, transparent, and better risk managed financial system. So that's my view. I think that's where the financial system, what I call the internet financial system, should evolve to. And I think philosophically what we're doing is very aligned with that, and we're trying to build towards that.
Jeremy, do you think that's like 40 years away that we get to there? Because we know it's hard to uproot these deep-rooted TradFi systems and how the world currently works.
Well, I don't think so. I mean, it might be the next 10 to 20 years, but that's not long. I mean, I've been doing this for 11 years. It seems like, it's moved very fast. And if you think about the arc of the internet and the way the internet and software and open networks have kind of consumed more and more of functions of society, right? It seems like it's happened really fast, but it's also, it actually takes a long time, right? People don't realize, like, you might use Netflix and YouTube like tons, but actually the vast majority of viewing hours of television are still on cable and satellite, right? So we're still like, these evolutions take a long time. And so an evolution, it can happen gradually. And these kinds of structures can be built up. And, if they were in 20 years, if what I'm describing was 10 or 15% of the financial system, essentially, if the internet financial system became 10 to 15% of the global financial system, that would be an extraordinarily large market, extraordinarily large. And so you don't, it doesn't have, it's not a binary outcome. It doesn't have to be like everything is this way or everything is that way. Just like private credit has evolved alongside traditional bank lending, this kind of internet financial system can evolve alongside the existing financial system.
A good segue into BlackRock. I would love to learn more about how you're working with them. I've read they're custodying, if I'm not mistaken, the Circle Reserve Fund. Also, Circle has debuted a way for BlackRock tokenized fund shares, or to trade tokenized fund shares with USDC.
Yeah, so BlackRock is a really fantastic strategic partner for Circle. They're a strategic investor in the company. We partnered closely with them to build this reserve model where we have the most transparent, auditable, kind of publicly visible reserve model for a stablecoin in the world. We've done that together with BlackRock, and that brings great liquidity, transparency, regulatory compliance, other things to USDC reserves. And I think we were really excited when we started the partnership a couple of years ago because the leadership of BlackRock, Larry Fink, Rob Kapito, others in the firm, right, and the digital assets team, they had a big vision for where this could go. And we were excited to be able to partner with them. And I think this idea of tokenization, which is something that we've all talked about for a long time, I've been talking about it since 2017. This set of ideas to have the largest asset manager in the world, to have one of the largest asset issuers in the world, literally say, we are going to take one of the most fundamental products that we have, which is sort of a government money market fund, and build a tokenized version of that. Super exciting. So our role in that is small, which is that we want to ensure that if people are redeeming the fund, that they can transfer using USDC as a way to do that. And it's interesting, you've seen just in the last several weeks, Franklin Templeton, which is doing this with their Benji token, using USDC as a way to create and redeem that. You're seeing a lot of the other like RWAs that are on-chain T-bills and so on, all using USDC as a way to kind of get an out. You're going to see more of that. So we think it's a great use case. Partnering with BlackRock has been tremendous. And certainly we hope to be able to continue to collaborate with them a lot more in the future too.
I did want to get your thoughts on US crypto regulations and the impact on politics. It seems the winds have changed in DC. We have presidential candidates like Donald Trump coming out and saying he's the pro-crypto candidate. Democrats started panicking a bit there, joining their Republican colleagues to pass the FIT21 bill in the House, also repealing SOB 121 in the House and Senate. What are your thoughts on this? And, could we see crypto come up in the presidential debates?
Yeah, I mean, I think there's a polymarket market on whether or not it's going to come up. But look, I view the fact that this is becoming a much more significant political issue very favorably, which is, in my view, it's about time that America's political leaders began to really understand what's happening with this technology, what's happening with this industry, what's happening in the United States with innovation, and what it could mean for the dollar, what it could mean for other internet markets, and how it can transform those. And so, I think it's about time. So I'm actually very happy this is becoming a bigger political issue. I'm not going to comment on any given political person's kind of view here, but I think it is creating an environment where policymakers are realizing that this is a significant industry. It has a lot of opportunity, and the United States should compete in this. I mean, you don't have to look very far. The EU has comprehensive crypto markets regulation, regulation for issuing tokens, for how the markets are supervised, for stablecoin issuance. It's very comprehensive. The EU is outcompeting the United States, and I think you're going to see a lot of activity emerging in that world. And so, policymaking in the United States is a particular form of sausage making, and it's not always the most, if you go into a sausage factory, right? So that is the case. But I do think that more and more policymakers are now at least getting better educated. They're meeting with industry, they're meeting with end users, and I think hopefully that can lead to like good balanced policy. At the end of the day, no one can put their head in the sand and say there aren't extraordinary risks. There are fraud risks, abuse risks, criminal risks, all kinds of things. There's been blowups. All this is very clear, and so the need for practical regulation that does deal with those issues, but also is designed in a way which actually reflects the reality of how this technology works and not trying to jam it into 80-year-old laws. That's really important as well. So look, I think I'm more optimistic than ever about the ability for policy to happen in the United States. And we'll certainly see what emerges during the remaining 6 months of the year.
Final question here for you, Jeremy, and it's a question a lot of people want to hear from you on: when IPO?
I can't comment on any particular regulatory process that we have as a company. I have said for a long time, like we are committed to being a publicly traded company in American capital markets. We think that's really important to the kind of role we play in the financial ecosystem. We think that the trust and transparency and accountability that we've built up our reputation around can be further strengthened by being a publicly traded company, and that is certainly our intention. But I can't make any comments about specific regulatory matters.
Jeremy, pleasure. Congrats on all the success of Circle and USDC. And I'm a user, so I'm rooting
Awesome.
for you guys, and I
Thank you.
appreciate you.
Totally. My pleasure.